Okay, yesterday a lady asked me how can she identify swing points as a swing trader, and it's a topic that really have a good interest on. And for you to call yourself a swing trader, that's the first thing that you should ought to know how to able to identify swings as a swing as your points of interest, not even as a swing trader. Okay, in this video today, I will be teaching you guys the easiest way to identify swings and a high probability swings points. Swings that are with less probability and swings that are with high probability, and this actually the swing that you should be looking out for while placing your pending order. Okay, now without wasting much of your time, as you can see, I'm already on the chart here. Let me go straight to the chart. Okay, looking at this structure now, this is, let's say, maybe a blueprint on how to identify swing points. Okay, because as a swing trader, we place our pending orders on swing points, possibly high probability swing points. And as the lady asks, she asked me how can she be able to identify swing points as a swing trader. Now, this is um a sketch on how price reacts. As you can see, this is a bullish movement, retracement, giving us a swing high and a swing low. Already, this is already a swing point. For price to reach at this level and retrace, have already made this a swing point. Okay. And here too is also a swing point at the the point in which the retracement stops can be called a swing point. Now, price continue its bullish movement to give us a break of structure. This is a BOS, giving us a break of structure. And for you to actually identify a swing point, there are two things that you should look out for. Number one, swing point should break a structure. So a swing point should lead to a break of structure. That's one. Two, a swing point should be fresh. It shouldn't be mitigated. A swing point shouldn't be mitigated. It should be fresh. Don't worry, when you enter the live chat, I will show you what it means, what I means for a swing point to be fresh. Then three, it should have big momentum. It should have big momentum. I mean, big momentum. The candlestick body should actually move with a high momentum. Okay, these are three things that you should be looking at for while choosing your point of interest as a swing trader. All right. Now, this is the swing low that took out the swing high. All right. And when price was retracing, I wasn't expecting price to actually come straight down here before its movement, but as price may have it, it gave us another swing low here, a little bit movement, giving us an inducement. What price did here? We call it inducement, a trap. My boss call it traps because all these retail traders, scalpers will take care as a support on for this to form on a 4 hours time frame. If you go to 15 minutes in which many people do trade on, they will count here as a support. Trust me. And this is actually an inducement, a trap for traders, which we call inducement. And what this is from, it's looking like here, making here a high probability setup, as long as we are still in an uptrend. Once this inducement is formed, it have turned this swing low to a high probability setup because this is an inducement. You can call it liquidity. You're correct. This is called liquidity and inducement because many traders will enter a buy here for price to react here and move a little bit up on a higher time frame. Like I told you, we swing traders we do on higher time frame. Nothing leads us to 15 minutes, nothing carries us to 5 minutes or whatever, 30 minutes. The our business we have is weekly, daily, 4 hours, weekly, daily, 4 hours. Then I personally I choose to take my interest at 1 hour and 2 hours. Okay. I choose to take my interest at 1 hour and 2 hours. All right. So when this is formed on a 4 hours time frame, in 15 minutes, this will be a very big support. And if you check, is aligned with this previous swing high. It is well convinced that here is a support for them. All right. It is well convinced that here is a support for them. And for price to react to the upside, some retail traders will jump into buy. And guess what? All of a sudden, boom, price shift to the downside, taking them out, sweeping liquidity, making here a valid or a high probability setup. Once price comes down here, for price to completely break this structure, not really take out, because price can choose to sweep it and continue going up. For price to break out this swing low. I hope you guys still understand the difference between break and sweep because this is another important aspect in swing trading. If you can able to identify a break of structure and a sweep of structure, these two things is very, very highly important. I made a video on it and I posted it. Please go back and watch it. Difference between break of structure and sweep of liquidity. Very, very important. On price, if price should break this low here, it's it will turn into a change of character, making trend bearish. For price to remain and for price to remain a bullish move, it's have to respect this swing low because it have already taken a liquidity here. For price to remain bullish, it have to respect this swing low, thereby putting your entry here and taking your profit at the next swing high. I hope you understand this. It's just very simple, exposing you to lesser risk. For price to continue its bullish movement, it shouldn't break this low. You understand? For price to continue its bullish movement, it shouldn't take out this low. It can sweep liquidity. It can. That's why I always place my entry at the edge. But even if price choose to sweep liquidity, the wick, the wick might actually end somewhere within my stop loss. It won't take me out. The wick of the candlestick that should sweep the liquidity might end somewhere within my stop loss and will take me out, thereby forming or giving me a snapper entry or giving me forming a pin bar, a bullish engulfing hammer, that kind of thing. That's for sweep of liquidity. But if for price to respect this place, it might actually form bullish engulfing candlestick pattern. You understand? Or maybe a tapping can even go a pin bar. All right. So this is how to identify swing points. Very, very easy. There's no tools about it. So straightforward. Can't you see how easy it is for me to explain it? This is the same way you also see it on charts. All right. Let's go to this second example. Price is actually ranging in this resistance. You understand? Price is ranging on this resistance, and finally, boom, this is the break. Okay. And once price break, I was expecting the price should come back to retest this support and continue it down trade. It didn't. It didn't. This is a space here. There is actually a space here. And for price to come up to this level without mitigating this support turn resistance, makes this swing a high probability setup because it is this swing that took out this support, not this, not this. It is this swing that took out this support. You understand? Like I told you guys that for a swing to be noted, it should break a structure. Look at the structure, it took out the structure, making here to be turning here into from a support towards resistance. You're no longer looking for a buy. You're not looking for a opportunity. Whereby what made this setup high probability setup is because of when price comes to retrace, our people, somebody like me will be actually waiting for it to come back to this support or resistance to continue either move. But it didn't. It stopped halfway, giving us an inducement to this swing, giving us an inducement to this swing. And after the inducement was formed, you see a break of structure. You see a break of structure. This is a BOS. It is a break of structure. And possibly after whatever happened in the market, price comes back retracing with a very big momentum up to the upside. I will wear a short to positively to take this trade. Possibly to take this trade, entering my short entry at the edge of the swing high, because it is still fresh. Price haven't it have not been mitigated. It have not been mitigated. Then my TP should be at the nearest swing. Like I always told you guys, my TP is always be at the nearest swing. You understand? That's where I place my TP at the nearest swing. Where is the nearest swing? This inducement is the nearest swing. Because this inducement can actually turn into a support. As if you check very well, if you really check very well, this is the break of structure. And when price comes up, forgetting that yes, this might be an inducement to this swing. This can be an inducement to this swing. But in other words, this can also be a change of character. You understand? This can also be a change of character. And the reason why price will respect this swing point is because price doesn't move in one direction. Price doesn't move all the way up to the sky. No. Price must actually do what? Retrace. Must actually do what? Retrace. And for this, for even if price has changed direction into a bullish movement, remember this is a downtrend. Even if price has changed direction into a bullish trend, for it must retrace from this swing point. You understand? Price would do what? Retrace. Whatever goes up must surely do what? Comes down. It can't go up forever. You understand? Now, where you have to respect the market is placing your TP at the next swing, because actually price can actually choose to do this respect here, and from this zone, from because this will now be resistance turn support and continue its uptrend. It can happen this way, whereby forming neck and shoulder chart pattern. This is neck, this is head and shoulder chart pattern. Understand? Thereby forming head and shoulder chart pattern for those that do trade chart patterns. This is how this is simple as how it works. You understand? And as long as it has not been mitigated, it is still fresh. It is still fresh. In other words, yes, this is an inducement to only to this swing. Apparently, it is also a change of character for price to break out this low, which means price have done what? Change character. I'm no longer waiting for it to come down to this level. No, no. Your target should be at the what? The nearest available swing, which is this. And I even have a classmate on the academy that I learned from. He doesn't even wait to he doesn't even wait to get to the swing. He always take the profit closer to the swing. closer. He doesn't wait for price to come to the swing before he take the profit. He places his stop, his TP actually closer to the nearest swing. That's his own pattern of trading. You grab, being safe. This is just simple ways to identify swing points. A swing point, number one, should do what? Should break a structure. A swing point should not be mitigated. It should look fresh. Okay? A swing point should have a large momentum. It should come with large momentums, like large um candlestick bodies. Now let's go to the rate chart. This actually on BTC. The way BTC this trend BTC is doing now, I was able to catch it anyway. All right, and you can see it is still how I actually left it. Let me explain what I did here. If you look very closely on this chart, you see that price break a structure over here, and before it break the structure, it formed what? A low here. Prime actually formed a low here before taking this out. This is a break of structure, meaning that we're staying in what? In an uptrend. All right. Now, unfortunately, price came down. Respect, respect this zone. Give us a swing guy. Boom to the downside. Now, like I told you guys, for for me to call or for me to say a movement as a retracement or a move, actually, it should be up to three candlestick, which is one, two, three. So this is a value. I can call this a retracement. It is what up to three candlestick. One, two, three. Valid to the up to the downside with a very large momentum. With a very large momentum to the downside. And it did what? It took out this structure, took out this structure. And since then, it has not been mitigated. It is still looking fresh. I place my sell order on this at the edge. Remember, at the edge of the swing, price came all the way up back again to mitigate my zone, and guess what? Boom to the downside. As easy as ABC. Like I told you guys, we don't chase trend. We only do what? Set our traps and allow price to come to our point of interest. It took this trade like either 2 weeks. It took price 2 weeks to come to my point of interest. 2 weeks. And the 2 weeks was worth waiting. I can actually take a trade once in a week and I'm in profit than somebody that is taking trades 5 times a week. Understand the point there. I can take a trade once a week and still be in much profit than somebody that is taking trades 5 times a week. As you can see, this is 1:3. All right, 1:3. And if assuming I kind of reduce my stop loss to where it should be, you have seen the figure I'm seeing so far, 1:64. And let's assume I took the trade down where it should get to. Huh, that's it. But discipline will always remain the key. Your TP should be at the next swing available. Your TP should be at the next available swing. All right? That's where you should place your TP at the next available swing. The same thing occurs here. The same thing. This is a support. Price comes down to take it out. All right. Living here. It is still fresh. Still very much fresh. It has not been mitigated. This is a large bearish candlestick body. Large. It is greater than the greater than the bullish, which shows that it's coming down with a high momentum. Once the bearish candlestick is greater, look at it's greater than the bullish ones. It's coming down with a very large momentum. I mapped it out. Took out these two swing lows. It's very strong. Took out these two swing lows. It's very strong. Wait for price to come back. Boom. And where should be your TP? Of course, where else should be a TP? The TP should be at the next available swing, which is this. And your stop loss just a little bit above the wick, a little bit above the wick, exposing you to lesser risk, exposing you to lesser risk. Swing trading, I keep on saying it in all my videos. Swing trading exposes you to lesser risk. That's if you're trading with pending order. But if you're trading with confirmation, confirmation exposes you to high risk. But if you trust your analysis so far and use pending order, it exposes you to lesser risk. That is where you will have the ability to control your risk. Look at how much I'm willing to risk on this trade. By using a pending order, you have all the chance. You are not rushing to meet up with price. Price is still far behind, far away from your point of interest. You have all the whole time. This is why I love swing trading. You have all the whole time to think of how much am I willing to risk on this particular trade? How much am I putting on? What is my stop loss? You calculate your pips, your stop loss. Okay, if price should hit my stop loss, I'm losing $10. If price should hit my stop loss, I'm losing $20. All right. My stop loss is 10 pips, is 15 pips. 15 pips to this is $10. 15 pips to this is $30. All right. And if I'm using 10s, 10s is $10. If I'm using 20s, 20s is $20. It gives you time to calculate well. That's something so much I love about swing trading. And even if you actually end up losing that trade, you can be able to spot where your mistake is coming from. Okay, that's it. And I believe that you have grabbed this so far. Please, these videos is not something that you watch once and ignore. Please keep reviewing it until you're able to understand it. Remember, I'm here for questions. If you have questions where you're actually confused, please do well to drop it on the comment section, or you can use the link on the description to come to my DM direct and ask me. I'll be willing to answer you. All right. And if you have anything else regarding to trading that you are not clear of, I'm here to assist you in any way I can, please. All right. I believe that this video have done more help than harm to you. And if actually like what you just viewed, please do me the grace to, of course, subscribe, turn up your notification button, like, and leave a comment on the comment section. See you on my next video. Have a great day. Bye.